you're brand new, you don't understand how Fib works, I'm gonna write it out for you. We're not gonna make it super hard. You have your A low, which is the start of the Fib sequence. You have your B high, and so now you've got what's called an A-B boundary, right? And so what the information that's important to us is your C and your D. So while this is A, this is B, your lowest point between the A-B boundary is your C. This is the C. And so you would have set this up to figure out how to get into it, how to buy into it. But because we pulled back to a level that's a red level, the theory is that price, the take profit, is at the red level. Good morning. I hope you guys are doing well. This is Casey Jackson. For those of you guys who are new to the channel, I make videos on YouTube and I share my insight on the technical performance of forex pairs. And so today I want to take a look at GBP JPY, and I'm gonna do my technical analysis thing. And so you're probably like, okay, what does technical analysis mean? That means I'm going into the chart and I'm using historical data and tools like the Fibonacci retracement tool, Fibonacci extension tool, support, resistance, and trend lines to determine what I think the next move in the market will be. And so that's what I'm doing right now. So I start off on the higher time frame. I start off on the monthly, and then I work my way down to arrive at the lower time frame to hopefully, the goal is at the end of this that I'm able to find a potential setup that I either can execute now, or I can set the parameters in my MetaTrader 4 to be able to do so. So I am finished with the monthly chart. And what I did was I went through, I identified the swing highs and swing lows. If you don't know what a swing high or swing low is, I strongly encourage that you visit the no cost mini course. The link is in the video description, so you can keep up to date with the terminology that I'm using and kind of have an idea of what I'm talking about. So now that I'm on the weekly, I'm going to do the same thing that I did before. I'm identifying the highs and the lows on the chart. And so let's see. I hope you guys can hear me well too. I'm sad to say, I'm still getting my life together after moving. It had been a very long time since I had moved, and having a YouTube setup, I didn't realize how much stuff would have to change. And so I am still working through getting audio together, getting video together. Well, I think we got video covered. I think it's the audio that is the issue that I'm working to resolve right now. And so I'm hoping that y'all can hear me relatively clearly. But I appreciate you guys being patient with me and sticking with me through this transition so that we can continue to grow together. Okay. All right, so I'm on the daily, and guess what I'm doing? Right, the same thing that I was doing before, finding my swing highs and my swing lows on each time frame. And I changed the color of the time frames because if I happen to be out and about and I want to execute on something, or I want to quickly look at the chart and see where we are, I need to be able to quickly identify what it is that what time frame I'm on, so I can accurately assess what's going on. Okay, so I've identified the levels on the daily. I'm gonna go down to the 4 hour. I'm gonna do the same thing that I did before. Just identifying those key levels of support and resistance. Now, 4 hour is typically the lowest that I'll go to because I like the higher time frame trades, but sometimes I will go to lower time frames to try to find setups. Not all the time, just because I know that I'm fairly busy, and usually if I find the setup on the 4 hour, it will take a few days to a few weeks to play out, and so I like those type of setups. Okay, so we are on the 4, And let me just mark off. This is a level of support here. Now, kudos to y'all who caught the move to the downside. That's amazing and pretty impressive. Price moved almost 3,000 pips to the downside in the last month. And so now I think it's critical to understand where we are and what we could potentially expect to see in the next few weeks or even months as price continues to move. All right. So now that I've done that, I'm going to go back to the monthly. And if you aren't familiar, I use the Fibonacci tool. Fibonacci is like a game changer. And if you haven't already started to learn about it, I advise that you do. And again, if you're not familiar with it, you can go through the mini course and I'll break down some of the information for you about how the tool works. But if you're looking for a cheat sheet on where to get in, where to get out of the market, that mini course is going to give you the information you need so you can do so. Okay, about the Fibonacci tool. So looking at this, those of you who are familiar, you know what's up here, right? So there's no active fib sequence. A D extension was hit last month at 206.16, right? And so now we're waiting for the sequence to restart. And so we have to wait a little bit on this time frame in order to see which direction the market is going to move. And so I'm going to delete this because we see for the last 4 years, price has been moving to the upside, right? On the higher time frame. And most recently last month, we got the break to the downside. And so we've completed this sequence. I want to go down to the weekly. And now I want to see what's going on. So I think on the weekly, we're probably going to get the same information that we got on the higher time frame. It's not going to change too much. Oh, wait, let me make sure I'm at the bottom of the sequence. Yeah, see, I put the fib in the middle of the sequence. That's not helpful because you don't get the full picture. And so you see, we got the same information. We hit a D extension at 206.16. That doesn't tell us much at all. So I'm going to go down to the daily. And on the daily, because we hit that D extension, so that take profit, the target on the higher time frame, I'm interested to see what price is doing now that we're moving to the downside. So I'm going to take my Fibonacci tool and I'm going to deploy it to the downside because that's the direction that price has been moving in and been moving in heavily, like 3,000 pips to the downside. So let's see. This to me shows an active fib. And I know it's active because it's lit up, right? It's not white like it was on the other one or clear. And what I see right now is that this fib to the downside, this A, this B, we're waiting for price to find a C. And looking at structure, I wouldn't be surprised if we ended up somewhere around 193 or so. But the ultimate target, let me get rid of this. I don't know how to get rid of it. But the ultimate target based on this Fibonacci sequence is 165, just below 165 and some change, right? So, but before you get there, we got to look at key levels. So the key levels, and the reason we call them key levels, because they're on higher time frames. And that means that they're much stronger levels than, let's say, a 4 hour. Or like how a monthly would be stronger than a weekly, or a daily would be stronger than a 4 hour. So if we look, we have key levels at 180, right? We have a key level at 178. We got another key level at 176. And then we have a really strong level at 172. So even though the target is at 165, we'd have to break through all of these levels before hitting that target. So I want to drill down to the next time frame. Let's go to the 4 hour and let's see what we seeing. So we know that price is searching for what we call a C, an entry for a sale, because my bias is still to the downside right now, right? Because let me take you back up to the daily. I want to show you why I'm interested in moves to the downside. Not only because of the monster 3,000 pip move we got, because we broken a major trend line to the downside. And I should have did it from just the inside, but it's fine. So if I look at this, right, price has moved. We've broken this inner trend line. We didn't quite break the outer yet, but what I think is happening is we're searching for another entry for the sale. So I'm gonna get rid of this. I'm also gonna get rid of this. We're gonna go down to the 4 hour. And let's see. Oh, we already saw what was on the 4. So I do want to go to the 1. Now, I don't usually do this, but looking at how fast price moved, how many pips we moved, I want to keep examining. All right. So 191.31. Oh, we got a little bit to go. Okay. So what I'm looking at and why I put the fib this way is because, remember, I told you, fib tell you where to get in, where to get out. And based on this setup on the 1, price is still moving to the upside, right? So the target is not, the target is at 191.3. It's still active. So when I say it tells you where to get in, where to get out. So looking at this, if you're brand new, you don't understand how fib works, I'm going to write it out for you. We're not going to make it super hard. You have your A low, which is the start of the fib sequence. You have your B high. And so now you've got what's called an A-B boundary, right? And so what the information that's important to us is your C and your D. So while this is A, this is B, your lowest point between the A-B boundary is your C. This is the C. And so you would have set this up to figure out how to get into it, how to buy into it. But because we pulled back to a level that's a red level, the theory is that price, the take profit, is at the red level, right? Follow? So if price would have pulled back to the 786, then we would have anticipated that the take profit would have been at the blue level. So 786 is blue. This would have been blue. If price would have pulled back to the 86, which is the green level, we would have anticipated take profit at the green level. Like, it ain't got to be super, super hard, right? So it is my thought that at this level, we may see price begin to break it down. Okay. So I'm going to get rid of this. And I'm going to go down to the 30-minute. Yeah, look, you starting to get signs of resistance. Starting to get signs of resistance. Now I'm going to watch. I'm going to deploy my fib. And so on the 30-minute, it's the same thing, 191.52. Okay. So what we got going on here, and I hope this would be great if this did play out. So on the 30-minute, what we got here, we got the A, we got the B boundary, and price has moved to the upside. I think that price would need to push up a little bit higher in order to get that strong sale that I was looking at before, down to that 168, I think is the number. It needs to pull back a little bit more, in my opinion. That's just me. But in the meantime, it looks like there's a potential opportunity that I could take. So what I'm highlighting here is we have an A high, A low, a B high. We had less than a 38.2 pullback. So this to me means there's the opportunity for price to continue to push to the downside to at least this 38.2 level and then move to the upside. Looking at structure, there's a level of support below the 618. I wouldn't be surprised if price pushed below this 618 level or to this 4 hour support level before making a continuation to the upside. Now, if price hits this D extension at 191.52, then this invalidates this entire idea. So what I would do if I were interested in this potential opportunity, because it's a great opportunity, looking at where price is right now and not even where it is right now, where we would likely be able to enter. This is almost a 500 pip opportunity to the 38.2, right? And the reason we trade to the 38.2 is because when we have those shallow pullbacks, price likes to come back for a deeper retracement before continuing and finishing out the sequence. So if we're able to get this, there's an opportunity for over 400 pips on the table for sale before we're able to turn around and see what we need to do, if we're going to buy or if we're going to keep selling. So the way I would play this is I would set it up for a traditional sale, right? Traditional sale. Oh, I did this all the way wrong. Let me slow my behind down. I'm going to go to the last swing low and deploy. And then you see how we reacted when we got here. Price pushed straight up. It must have been some news today, either for the GBP or the JPY. I wonder. I'm gonna have to look and see. But I'm gonna set this up like this, and I will move it down. I'm gonna get rid of the fib because we already know what we're looking for. We've already identified those levels. I'm gonna move it down to the 15. Yeah, we may play here for a while. We may not come down. We may not come down. And I'm gonna wait. I'm gonna wait for some type of break. And so given the steepness of this, I don't like that either. You know, you may not be able to get that full move. You may have to wait until you get the break out here. Until you get the break out here and then take the move to the downside, because price shot up so quick. Unless you just go ahead, you set it up so that your stop loss is just below that 19152. Because if it hits 19152, the whole trade is invalidated. And you just take the risk, low lot size, and enter a small position here. The stochastic is in the sell zone or approaching the sell zone on the 15, on the hour, on the 4 hour. So there may be, you know, I wouldn't recommend that you approach all trades like this. I see this one a little bit differently as, okay, if I lose, I lose. But to me, things are lining up where it makes sense for a small position to be entered. And so I would look at it that way. But if you want to play it more conservative, I would wait until we get the break, because this is so steep. Like, I can't even draw a trend line against this, but I know that this is a significant level. So I'm gonna enter a small position. I'm gonna set my stop loss before the 191.52. And if I get knocked out, I get knocked out. But in the interim, I see the potential for a sale opportunity to the downside out of this zone here for over 400 pips. And it may be even more than that, because you have a significant level at this 184 that also aligns with the 618 pullback level, which is a sweet spot level. So I'm going to do that small position. I'm gonna wait before I enter another trade to make sure that I got my confirmation before moving on that. So let me know what y'all think. You can put it in the comments below. How are you playing this? Are you only bullish? Are you taking the moves to the upside as is? Did you get in on the break of this resistance level here? And are you riding it all the way to the 194? Or do you think there's an opportunity for us to potentially get a sale? And how will you plan to enter that? So I'm curious. Anyway, I appreciate you guys for watching this video. More importantly, I appreciate your patience through my transition. And I'm excited to be back with you guys, be back on these charts and catching pips together. If you like this video at all, consider giving it a thumbs up. And then if you think somebody can benefit from the approach that I take to the market, make sure that you share this video with them, okay? So I will see you guys on the next video. I hope that you have a phenomenal rest of the trading week, and I'll see you soon. Bye.